2020 has been one hell of a wild ride. Massive price swings fueled by fear and euphoria. The real animal spirits that John Maynard Keynes so popularized. And I'm not even talking about the crypto markets. Yes, this year saw some of the most insane price swings and volatility for stock markets. In many cases, these were record-breaking. However, we have one more pivotal event that's coming up this November, and that is the US election. One cannot deny that the outcome of this monumental vote could have severe implications, not just for the equity markets, but also our beloved crypto markets too. Yes, crypto is apolitical, but we cannot deny the impact these global macro factors have on our portfolios. My name is Guy, and in this video, I'm going to tell you exactly why you need to have your eyes glued to the election results, what you should be looking out for, and how you should adjust based on particular outcomes. There are also some unique opportunities that you can take advantage of right now that can help you prepare yourself for these tumultuous times. So you don't want to miss that. Quickly, some of that legal stuff. I am a crypto guy. Some say the crypto guy. But I am definitely not a financial advisor. Everything that I say here is purely for your educational benefit. Please do your own research. With that out of the way, I'd like to welcome anyone new here. As mentioned, I'm Guy, and over here I cover everything crypto, from markets to reviews, guides to news. Hence, if you want to be kept abreast of all the things going down, then I encourage you to hit up that subscribe button. You may also want to turn on those notifications to ensure you don't miss a single video. And finally, time is the most valuable commodity of all. And because I value yours, I have placed these timestamps below here. These are there for your convenience, so feel free to jump around to different sections at your leisure. Okay, enough of this foreplay. Let's dive into this video. Before I can do any analysis on how crypto is likely to be impacted by the election, I have to explain why it could be impacted at all. Indeed, many people are of the view that Bitcoin is honey badger money, completely independent of traditional markets and events. Now, while in the past this may have been true, things are vastly different in today's world. Bitcoin is no a cypherpunk's wet dream. It's a well-respected asset class that has large institutional investors flocking to it in droves. Oceans of liquidity from thousands of exchanges and OTC dealers mean that the Bitcoin markets are as efficient as ever. Now, of course, given this change in the investor profile, it means that these investors are likely to react to global macro factors with Bitcoin as they will with their equity portfolios. They are increasingly viewing it in their risk-on portfolio bucket and less so as a store of value. You don't have to take my word for it. Just take a look at how Bitcoin has been trading with the US equity markets. One of the biggest crashes of 2020 was back in March when it fell to below $4,000. This was the time when the S&P 500 also faced its steepest decline in decades. There have been many other times over the past 6 months where Bitcoin and the crypto markets have taken their cue from the equity markets. Look at this photograph. Here you can see the historical correlation between Bitcoin and the S&P 500, 1 year rolling. As you can see, back in the day, Bitcoin used to have almost no correlation to equity markets. In fact, on some occasions, they used to have a negative correlation. A perfect hedge against equity. However, as you can see in March of this year, things flipped. Correlation jumped up to 32%. This has continued trending up, and by the time of this video, it stood at 45%. These are actually pretty reasonable statistical relationships, which show that Bitcoin and the S&P 500 are tending to move together and in the same direction. Indeed, if we were to take a look at the 1-month correlation, this has reached as high as 77% in July of this year. And while this is just Bitcoin, I'm sure that if we were to study the equity correlation with the rest of the crypto complex, we would get similar results. I know this mainly because of how correlated these other crypto assets are to Bitcoin itself. Okay, so we know that Bitcoin has been increasingly tied to moves in the equity markets. And there is no reason as to why this relationship will not hold when it comes to the November elections. This now brings me on to the next part of my analysis. How are the markets likely to react to the election results? Well, there are a number of scenarios that could play out as a result of this election. It's not just a simple factor of one winner and that's it. I should also point out that I'm not an American, in case that wasn't obvious already, and obviously have no dog in this fight. I'm just interested in the impact this could have on the markets. So, let's start with the first of the potential scenarios. That is that Trump wins the presidency and the Republicans are likely to retain the Senate. This outcome is likely to have the biggest positive move in the stock markets. This is mainly because Republicans are viewed as business-friendly and, as such, are likely to push forward a more business-friendly agenda. You only need to look at the most recent pre-pandemic equity rally that we had. One of the biggest drivers of this were those corporate tax cuts that the Trump presidency pushed through. As we know, less taxes mean more earnings per share, more spending and more company growth. All good for the stock markets. In terms of predictions on price movements, John Stoltzfus, chief strategist at Oppenheimer Asset Management, thinks that such a scenario could see the S&P 500 rally by about 4 to 6%. Let's take a look at another scenario, and this is likely to be flatter for the markets. This is when Trump wins re-election, but the Republicans lose the Senate. Yes, this can actually happen, thanks to the Electoral College. It's quite different to how things work here in the UK, for example. Anyways, under this scenario, you have a lame duck president with Congress in the hands of the opposition. So while this may mean political deadlock, it does mean that to get any sort of legislation passed, there will have to be compromise. It will mean that Democrats with a generally less business-friendly agenda will have to come back towards the centre. My view is that this is likely to be rather neutral for stock markets. While we're not likely to see all of that business-friendly agenda, we could see some balance to appease both sides. So, that is the lame duck scenario. But what happens if it's a clean sweep for the Democrats and we have Biden as president and the Democrats controlling the Senate? Well, this is likely to be negative for the equity markets. This could effectively give the Democrats control of policy as they will control both of the legislative bodies as well as the executive. Some of the risks that people foresee include higher corporation tax and higher personal taxes. This would be in order to pay for the increased social programs that the Biden campaign is hoping to roll out. You can take a look at some of these over on Joe Biden's campaign website. Anyways, the point is that without any sort of resistance from a Republican Senate, these could quite easily pass. This is something that the equity markets are quite aware of, and as such, estimates for a stock market pullback are about 6 to 10%. So, not too good for the short-term equity markets and, most likely, your crypto portfolio too. However, this is perhaps not the worst scenario at the moment. There is one that could be even more negative for the equity markets, and that is a contested election. Markets hate uncertainty, and nothing is more uncertain than who will be President of the United States. And given the unique circumstances going on in the world right now, it's not a completely unrealistic scenario. Allow me to explain. I just wanted to take a quick pause in this video to thank you guys, my loyal subscribers. 3 days ago, this channel surpassed 100,000 subscribers, no doubt a milestone for any YouTuber. I'm also quite surprised at how many people want to watch me babble on about crypto. Either way, I'm really honoured to have your support. My only promise to you is that I will remain authentic, transparent and consistent. These are the main reasons why I started this channel, and I'm going to stay true to them. Now, back to the video. This is the first time in human history that people will be voting during a pandemic. A pandemic that by many accounts is now onto a second wave in many countries, not least of which is the United States. Given that people are naturally fearful of standing in line at a voting booth in these times, there is likely to be a record number of votes cast by mail-in ballot. Given that they're sent via the mail, they do take time to be received and counted. There is a possibility that should this happen, you may not know an election result till days after the election. This, of course, creates great uncertainty. Or what about a situation in which it is actively contested, where, as was the case back in 2000, recounts are requested? Or one side takes the result to the Supreme Court? Can you imagine the potential uncertainty it could bring to the markets should this process be strung out over more than a month? As mentioned, there is a precedent for this. Back in 2000, you had Gore v. Bush, where the election battle saw it all the way to the Supreme Court. During the first 2 weeks after the election, the Dow sold off over 5%. Here you can see a handy chart that details the market moves and events subsequent to the election itself. And the Swiss bank, UBS, has even started to warn their clients that they should prepare for this outcome. JP Morgan analysts are also saying that if this is expected, you should diversify away from those US stocks. The exact size of the fall from this particular scenario is hard to tell. It depends on how long things are expected to be strung out and how nasty the battle is. If there's anything that we've learned from this year, it is that you can expect the unexpected. So yes, do be aware that this is likely and could drive down the equity markets. Now, if I was to put my fund manager hat on, I would say that investors are likely to sell out of risky assets in this scenario and buy hard assets like gold. Yes, Bitcoin is digital gold, but as mentioned before, fund managers and other institutional investors are viewing it through a different lens than they do gold. I should also point out that the correlation between gold and the S&P 500 is quite low and is sometimes negative, an inverse relationship. So, this is one of the reasons why it's being touted as a safe haven asset in this potential storm. Okay, so these are all of the potential scenarios. But which are really likely? Well, there are a number of places that we can look to get a sense of this. I personally hold the view that polls are for strippers. Hence, I like to take a look at what results people are expecting based on where they put their money. Yes, prediction markets are some of the best places to get a sense of likelihood around election results. There are a number of them that I like to reference. Firstly, you can take a look at Predicted. This is a prediction market that offers exchanges on political and financial events. It's a non-profit academic project where users can place small predictions on the outcome of these events. If we take a look over at their prediction map for the United States, you can see that Biden has the edge. His stock is trading at 63 cents versus Trump's 41 cents. You can also take a bit of a closer look into the Senate race over here. Similarly, the Democrats have a lead here with their share at 60 cents versus the Republicans at 42. Let's take a look at another prediction market, shall we? For those of you based in the UK and Europe, you can check out this aggregator site called smarkets.com. They collect all of the data on the prediction markets to give you a complete view of numerous different events. Here you have the US election markets. They have the probability of a Biden win at 63% and a Trump win at 36%. What's actually pretty cool about this is that you can actually see how the market has traded in the past. Here you have the percentage chance over the past 6 months. Oh, and look at this. Some people are predicting about 0.5% chance that Kamala Harris is the winner. Wonder what that will do to the markets. Let's jump over to the Senate race. They have about a 60% chance of the Dems controlling both of the houses of Congress. They have about a 35% chance that it will be the Republicans with the Senate and the Dems with the House. So also the edge to the Dems here. One more market that you can look at is the political perpetual futures over on FTX. These are contracts that expire at 1 based on whether the event occurs. As you can see, the Trump perp is trading at 0.40 and the Biden perp is trading at 0.60. So it's clear from all of these prediction markets that Biden is favoured to take the presidency and the Dems to take the Senate. Are prediction markets always right? Well, no. Indeed, in 2016, they got the election chances wrong as well. However, I'm pretty certain that in this case, those that are placing trades on a particular outcome will have adjusted their analysis based on what they learned from that miss, as any market participant should. Okay, so what does this mean for your crypto portfolio? And are there any things that you can do to protect from the uncertainty around this event? Or what about the dreaded contested election? Well, there is one opportunity that I noticed. One of the most direct ways that equity investors can take advantage of potential uncertainty and fear in the market is through the use of option instruments. These allow the trader to hedge a particular up or downside risk by paying the premium to acquire an option. If you want a bit more of an overview of options, then I encourage you to watch my video on Bitcoin options. It gives you the full 101 on these bad boys. And you can watch it right over here. Bang! Okay, so option instruments are often used in order to hedge out uncertainty in the markets. They're either written on individual stocks or on stock indexes themselves. Generally, the more demand there is to hedge uncertain economic events, the higher the premium on these options. The best benchmark for the option price and premium on the S&P 500 is the CBOE Volatility Index, more commonly termed the VIX. This is a measure of the at-the-money implied option volatility on the S&P 500. Basically, it's the volatility that option investors are expecting over the next 30 days on the S&P 500. For those of you who have an understanding of option theory, you will know that the higher the implied volatility, the higher the price of the option, calls and puts. So, taking a look at the option implied volatility is a good benchmark to determine how much demand there is likely to be for these option instruments. As we can see here on the chart, for the VIX, since the 17th of August, the implied volume has been on the increase. This shows that investors are increasingly buying options in order to hedge out their market risk. The fear index is on the rise ahead of the potential market uncertainty. Indeed, if we take a look at the VIX futures term structure, investors are expecting the highest VIX price around December. This clearly shows that these investors are hedging severe market uncertainty risk at the end of December. So, how do things look over on the Bitcoin option markets? Well, here is the 1 month at-the-money implied volatility on Bitcoin options. As you can see, it's been trending down quite a bit over the past month. In fact, it's near all-time lows since tracking began. So what does this mean? Well, it seems as if the Bitcoin options markets are not as fearful as those on the S&P 500. It seems as if Bitcoin option buyers are not too interested in hedging market risk at the moment. Does this make sense to you? Does it make sense that an asset that has a fair level of correlation with the equity markets is not pricing in a degree of uncertainty? It doesn't really to me, if I'm honest. I think that these Bitcoin options may be underpricing that uncertainty. They are a bit complacent around the potential impact that a contested election could have on the crypto markets. Now, given this low implied volatility, it also means that Bitcoin option premiums are quite low historically. Could this mean that there is some attractively priced option protection that you can pick up ahead of the election? Something to consider. That's it for most of my analysis, folks. I want to leave a few of my closing thoughts on the matter, though. There's no doubt that this US election will be one for the ages. Despite your view on US politics, one cannot deny the impact it will have. Apart from the impacts that it's likely to have on global geopolitics, it's also going to have big impacts on global markets. And, for better or worse, this is likely to spread to the crypto markets as well. Investors buying into Bitcoin right now are viewing it in the same bucket as their equity portfolio. This means that both could react to the election results, something the correlation charts clearly show. Right now, the prediction markets are giving the edge to Biden and the Democrats. Yes, this could be slightly negative for the equity markets, but it will be a smaller correction. At least there will be certainty around the outcome. However, let's not forget that these markets had Clinton with over 90% chance of winning back in 2016. They cannot be viewed as the Bible for political outcomes. As such, that risk of a contested election remains. It is something that could really throw uncertainty onto the equity and crypto markets. Something that you should definitely have on your risk radar. And if it is on your risk radar, then the options markets are a great place to hedge that risk. As I've shown, the implied volatility on the Bitcoin options is quite low. This is both in a historical context and when compared with the traditional equity markets. So if you're of the view that the Bitcoin markets are going to get choppy over the next couple of weeks, then there could be some good deals going around on the options markets. For those of you who follow my weekly email newsletter, you'll know that I currently hold a handful of Bitcoin options expiring in December, and I intend to continue doing so. Oh, and if you're wondering what the hell this newsletter is of which I speak, it's one email every week where I share everything on my mind: news, reviews, and market analysis. I also share a breakdown of my personal crypto portfolio. So if you want to jump aboard that rocket ship of crypto knowledge, then I have a sign-up link in the video description below, so be sure to check it out. Well, that's it, people. My view of this upcoming election and its possible effects on the crypto markets. But that's just my view. I'm keen to hear from you now. Who do you think's going to win? And how are you positioning your portfolio? Let me know in the comments. Oh, and while you're there, you may want to take a look at my personal deals page. This is exclusively for the viewers of this channel and includes some of the best deals and promos that I could secure for you folks in the crypto space. And finally, thank you so much for watching. Given that you're still here, I assume that you got some value from this video. So let me know by smashing that like button and whacking that subscribe. I have a hot pipeline for you.